Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome back to the Learning from Financial Fraud series on the Treasury Update podcast. In this series, we explore multiple major fraud cases. We dissect how each one occurred and was kept hidden for a period of time, and we'll dissect how it was eventually discovered and get insight and guidance on how to prevent this type of situation from happening to you and your organization. I'm Jonathan, Media Production Specialist here at Strategic Treasurer, and your host for this podcast, and I'm here with Craig Jeffery. Welcome, Craig.
John, thanks for having me on. I'm excited to talk on the fraud series again, and this one has one of the most interesting names for this type of fraud.
So this week we won't be talking about a specific example of someone who got defrauded or a criminal, but we are talking about a type of fraud called pig butchering. It's got a very interesting name, but before we get into that, let's do a recap of the past 6 episodes in this series. We've covered the Parmalat fraud scandal, Satyam scandal, the Wirecard fraud scandal, the FTX trading scandal, the Enron accounting scandal, and the scandal with Bernie Madoff and his Ponzi scheme. Do you want to share something interesting from one of those episodes if the listeners want to go back and hear one of them? What are your thoughts?
Each of those examples, the fraud cases, even though they span up to 20 years, are quite instructive. Parmalat, it's a Italian dairy. One of the things I find most interesting about that is it's a fraud case about creating fake balances in bank accounts. They fooled the auditors. That created multi billions of dollars of loss, and was significant. And that there's learning from each of these that is still applicable to today. I wouldn't say that everyone has solved the issue of how you track and manage bank accounts and have visibility to them. So that's one that I would point out as particularly interesting, and that's from a pretty long time ago.
Yeah, it's interesting you chose that one because we're moving from dairy over into pig butchering. So
it's all about farm stuff, right?
Farming and treasury. This is a type of fraud that targets individuals. Can you describe what it is and why we're talking about it today?
Yeah, well, it has been targeting individuals. That's where the key thrust has been. But some of the techniques they're using, we do expect them to leverage these techniques and learnings into the corporate space for corporate fraud, just like we've seen. Every type of fraud, it expands. Their criminal playbook expands. But so what is pig butchering? Besides being one of the coolest names for fraud, where did it come from? It's the criminals who do this call their victims pigs. And the butchering is also related to fattening up. And so there's a process. They identify a victim who they call pigs, and they fatten them up, which means they're trying to exfiltrate money as much as they can. And then the slaughtering is when they cut them off and make it so that they can't locate their money or gain access to it. So that's where the farm language comes from. This type of fraud has received announcements and alerts from FinCEN because of how extensive it's been. So there are some cases that are described where a group of, let's say, 7 individuals lost over $10 million through a series of different URLs and websites where this occurred. So there's not as much details. Individuals aren't sharing the information on how they got scammed, but this is a very significant deal. It's a lot of money that's been scammed through this process.
I don't think this is necessarily new, but it's been in the news a lot lately, and people are starting to talk about it. And recently, this kind of happened with one of my friends. Someone used their name. Instead of building a relationship with someone to make this happen, they used their name to get in with people that trusted them and basically doing this whole scheme, but jumping through without having to build the relationship. They just access someone else's relationship. Can you walk us through some examples of how you might see this happen to you?
There's a few things. Well, understanding that usually requires understanding how the criminals approach things, right? First, they're trying to build trust with the target or the victim. They oftentimes use fictional identities, potential relationships, so they pretend they're getting back in contact with some long lost friend. And so it's like a mistaken connection. They build a relationship. They usually have some kind of complex storyline, get out of debt example, and they eventually work it to the point where the victims put some money into a virtual currency or on some FX scheme, and they either take over control of the person's computer, or they run it through different fictional websites so that people can see, oh, my returns are awesome, they're great. And then they will continue the process of expanding that, usually with increased urgency. There's always a sense of urgency that leverages this activity. We see that in corporate frauds for, hey, you got to make this payment. The CEO wants this done quickly. And this is done on the individual level as well. And so that's an aspect or a technique that's used here as well. So the too good to be true, it was serendipity that this person contacted me. He thought he was contacting his long lost friend. And, oh, wait, there's a huge opportunity. And then, yeah, you should get your friends and family involved in this too. So there's a way of getting people hooked in for them to move funds in a way that the scammers and the criminals can control it. And then they'll put some pressure on at the end to try to exfiltrate the most amount of funds at the end before they butcher them, cut them free, and with all their money gone.
The conversations that you can read about pig butchering where they show you examples, they're so bad. Like if I got messages like that, I wouldn't fall for it. But people do. Why are people responding to these messages, and why does this work?
It's hard to say why certain things work. Just like the old messages that would come in that say, I work at a bank. We got this huge account. Here's a news article about someone who died in a plane crash. They left all this money, and I want to split it with you, or you get 40%. I just need to ship it to you, and you need to fill out this paperwork. That information used to be written very, very poorly and horribly. It's gotten much better. The fraud's gotten better. And so it's hard to say why some people fall for certain types of crimes. Could be they're distracted, something comes up, and all of a sudden something seems credible to them and they're moving forward in the process. Today I'm contacting a person who through their Facebook pages has people standing there with a sign that says, they got out of, they're debt free. They got rid of, $75,000, $85,000 worth of debt. And then in the comments, it talks about they were using, digital virtual currency. Now I know the person whose site that's on, and I would say I'm, if not 99% sure, I'm 100% sure they're not posting those. Someone has gained control of their account, and the person is, a well-respected person. They're probably not looking at their Facebook, and so it has all this stuff. So someone's like, wow, they got out of debt in months. And why can't I do that? And it mentions the, digital currency already there. So that's, in my mind, that's extremely likely that is another example of how I can spoof people. I leverage a position of trust, right? Because it's going to the people in their Facebook group or their social media connections. And it's like, oh, there's already people that are doing that. I want some of that. I want to be able to change my financial condition very, very rapidly. Get rich quick is always attractive to people in different ways. How you get past people's inhibitions on certain things, I'm not the right person to ask that, but there's always people who fall for that. And it's also a target to, they also target elderly people. So we'll put some stuff in the show notes about, like in the U.S., the National Elder Fraud Hotline. And there's also ways to report to ic3.gov when you see this. But so there could be a different range of why people fall prey to those.
Getting into someone's account and leveraging their reputation seems much more effective. And like the situation I was talking about earlier, someone created a Venmo account with my friend's name and a picture that was his, not from his Venmo, but from like Facebook or something. And then requested money and said, I'm at the grocery store. I'll pay you back. And like, that's a much smaller scale because I think it was like $200. But it's still like, that's enough where, they're not going to pay the groceries with Venmo. So it was weird, but that's going to get people to go, okay, yeah, I know this person. I trust them. But that's not what pig butchering is, because pig butchering is reaching out anonymously and saying, like, I get texts all the time that say, hey, Wilbur, are you still looking for this type of loan? We can get it for you interest free. Like, I get stuff like that. Or Wilbur, Thomas, they just make up a name. And then I'm assuming that if I reply, they'll say, oh, well, hey, Jonathan, we're actually offering this rate to anybody. How do people trust that? I mean, that's my question. I don't understand yet, but.
Well, if you read Charlotte's Web, Wilbur, I think, was the pig.
Yeah, and he got butchered.
Yeah, he got butchered at some point. I can't remember that part of the story. There was but Charlotte Webb, like some pig. Did he get butchered? I can't remember.
No, I think he made it out from his talent. But let's get into some more details on the process. Do you want to go through mistaken contact, the pitch? You've got a whole list of fund, invest, expand, amplify, and adapt. What can we learn from these?
Yeah, I was ready. I know you asked me lots of detailed questions, and this is targeting consumers more at the moment. The principles that the criminals are using, their playbook, that's going to continue to impact corporations. But there's the initial mistaken contact with a person to establish a relationship. There's a pitch on the investment side, how they're trying to convince people to get into it and then expand that. And then there's a amplification process at the end usually, and then there's the butchering process that concludes it. So we already talked about some of those items for social media sites or dating sites, gaining control of a Facebook account, sending text or other methods. I'm trying to establish a connection with an old friend. Let's reconnect. And it's like, oh yeah, because this is opportunity. I can only share it with some friends. Oh wait, you're not Wilbur, the pig in the book. You're somebody else. Oh, well, it's available to you too. There's some way of making this contact either known or unknown, but oftentimes it's some mistaken contact, so that it's like this is very fortuitous that they contacted me and I can reap these benefits. But the pitch is some type of make an investment in this, and it's going to be quite lucrative. And oftentimes it's in virtual currency or it's in some type of FX trading. Hey, there's differences that you can take advantage of. And so what they do though is not just say, send money, you'll do great. They also manipulate screens. They create fake websites. They have plugins to be able to falsify information. They insert plugins into the browser of the user, and then they can show, hey, here's your balance. You made a trade, and now the value's up. And so they're looking on the screen and say, I see it. This is what I see. I can recognize that the rates moved in my favor. I've made money. Or this is how you can make money. Part of that is they're showing them that information. There's also, or oftentimes, getting someone to register with a virtual asset service provider. So someone who manages virtual currency. So get them to register. Sometimes they'll register for them if they gain control of their PC, and then work with them to transfer funds into it. So there's the registering and then moving funds by wire transfer, prepaid cards, or they're buying virtual currency. Somehow they're buying virtual currency, moving it out of their banking system, their banking accounts, into provider of this virtual currency. They'll use that virtual currency to invest into other purported assets that will generate a high yield. So they've converted to digital currency, and now they're investing into some type of account that's controlled by the scammer. Hey, this is an investment, and then they can see their investments grow. And so it's either controlled by them individually or through other parties that are referred to by FinCEN and law enforcement as co-conspirators. They get to show that. They'll let people see that there's a return. They'll usually let people pull some funds out too. It's like, hey, I'm not so confident. Well, take some funds out just to see how it works. Oh yeah, you can take funds out. It's a legitimate process, and they'll expand it. Hey, you're earning quite a bit of return on this. Why wouldn't you share this with family and friends? You're earning massive. You're not earning 5% a year, 10% a year. You're earning massive returns on this. Don't you want other family members to participate? So that's a way of expanding the market. They'll do another process too, John, like trying to amplify the urgency, because they're trying to really fatten up the pigs to the maximum level before they're butchered. Right? When you bring the pigs to market, you want them to weigh the most. I've never brought pigs to market, but I assume you want them. I know you want them to be fattened up for market. You want them to be to get a good yield on them. So how do I do that? We create time-sensitive situations. You're going to miss out. There's usually high pressure, the sense of urgency. The sense of urgency is that, part of that answer to your question about how do they get people to do it. It's like, here's a big opportunity. You're going to miss out. There's a closing window. Make a decision quickly. They also are adapting. So some of these scammers are setting up, virtual gaming sites that they can use to steal virtual currency from players. Like they'll let them register, they'll plug in some information like, here's a setup for access to my virtual currency account because when I want to buy, some dance move or whatever the thing is that they're buying on those sites, that they can then pull the money out and do that.
So don't give your kids your credit card when they're playing video games.
Yeah, that would be a takeaway from another podcast, but certainly don't give your kids a credit card. Don't let them use your computer. But that whole promise of greater returns really is what helps amplify the losses that occur. Say, hey, invest more. Hey, you're earning more, put more in. You can really amplify what you're doing. And then finally, John, the butchering is once they start running out of funds that they can invest, it slows or it stops. It's like, how can I get the last bit out? So this is part of their playbook. How can I get the last bit of money out of them? I don't want to leave money on the table. I don't want to be embarrassed by my other scammers and criminal friends. Like, you left a lot of money on the table. They'll push for, hey, you have a loss. You got to make up that loss with a deposit. And like, well, I don't have money. It's like, well, you're going to have fees and taxes. And then if someone tries to withdraw funds, it's like, you can't get those out without paying fees and taxes. So to get let's say you have 500,000 in there or whatever, it's like, you're going to have to pay fees and taxes to pull that money out. And so you're like, well, I'm going to pay that to get the last bit out. Well, you don't get it out. You put more money in, and then they transfer the funds out through numerous private wallets with all kinds of coding and activities about what they're doing. And then they're butchered. They have no money. They can't find the people. It's been converted to digital and moved all around, and they're gone. Their funds are gone. They're still there, but their funds are gone.
There's a lot of parallels here to the Bernie Madoff scandal. He didn't have to build trust, though. He had trust, but it seems like there's a lot of parallels. He had people put money in, showed them reports of their interest, let them take money out, let them deposit more to get better gains, and then at the end, there was no money. It's very similar.
Yeah, I mean, there's a huge trust factor, and like you said, there's these fictitious statements. Instead of mailing statements or sending them as PDFs, it's allowing people to see them on the screen. So it's just a slightly different media, but the same process. Bernie Madoff did a pretty good job about setting up feeder funds where other people would be recruiting assets to put into the Madoff funds. So he expanded that more than the pig butchering process. So they have they can probably learn from his criminal activities, because basically if you say, can you get your family and friends to do that, that's not so big. But if you get brokers to distribute it to their list, now you can get serious tens of millions, billions really rather rapidly. But they're doing things quite successfully.
One direction I see this going is them using the trust of a company that, instead of being a personal attack, going towards companies and attacking them with the name of another company. Like they may say that they're in the Treasury Department of XYZ company, and they're reaching out to you they heard about your company, they heard about what you can provide, and they build a relationship that way. But the person reaching out to you has nothing to do with that company. Would that be similar? How do you protect against that kind of thing?
From a company standpoint, reaching that, I would suspect that might be a little bit harder, because you'd have to say, well, we're issuing these bonds at an above market rate, and it's available to some individuals, right? So that would be, I'm not trying to give criminals ideas, but that would be how I would think they could operate. I think the other one would be purporting to be from a brokerage or a bank, where it might be more expected to place investments with them and say, hey, we've got the deal. What a deal we have for you. And it's taking advantage of, volatility in the digital currency markets or FX. We found inefficiencies. We can take advantage of it. It's not without any risk, but it's kind of like printing money. And so, letting someone get in on that type of deal could certainly work, but you would definitely have that position of trust. People invest with those that they trust, either from a large institution perspective or from people that they trust.
Yeah, we got to watch out for verifying that people are who they say they are. don't trust people easily.
Well, there's the thing too is about that. It's like, how do people fall for this? There's the trust, but verify. You might trust that someone's giving you information or that you're actually dealing with the person you think you are. So there's validating on that and say, what due diligence do you have? How do you know that's the case? And then there's the verification. Well, a lot of these people verified it by looking at the screens. Like, I see it. Well, you were on websites that were showing stuff, and this is good. It's legitimate. I'm verifying it. Well, I'm verifying it. They set up a fake or fictitious site that showed you what you needed to. So you were verifying it, but it wasn't a sufficient verification because someone set up a fictitious site. Those are some of the challenges. Like, okay, now I'm going to be paranoid about how I validate and verify things.
We don't have any specific examples, do we?
No, there's a case on the FinCEN site where they give the example of a total of 7 individuals fell for this scheme and this scam. There was 10 or there's a handful of websites that were set up, fictitious websites that the law enforcement authorities shut down that were supporting this scam activity. So you think about 7 people losing 10 million. So people were pulling money out of 401ks or selling or taking loans out of their houses to fund and invest in this because of the great returns they're going to have. So it's not just like, hey, I had extra cash. I can get such a huge return. I can sell anything and make it back doing this. And then they find out that there's a loss. So that's a concern for elders, those that might be older that are oftentimes preyed on by these scammers. But it's easy to fall prey to some of these items when they're done well and properly. All it takes is like you miss something, and then, I've already verified it. I've seen this. Now I'm a victim. And it's much easier to laugh and think that someone else has fallen prey to this that they shouldn't have, because we see dozens and dozens. But so often there's something that happens where it's like, hey, there's a senior person talks to the CFO. I got that transfer done for you. What transfer? Well, the monthly transfer to pay for blah, 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 to pay for whatever. And they're like, what are you talking about? And then you know that there's been a fraud and they've been paying this for a long time. And so they were not, I'm sending money to a fraudulent person. It's like, I'm helping the CEO or the CFO accomplish what we need to in the business. And so it's all it takes is you miss something, you miss some element. And then the other elements the other activities that you do to be comfortable are forgotten. And I think that's the second guess yourself is probably a good technique. There's the verify, but make sure you're verifying properly. I don't have answers for all the ways you need to verify things properly, but whether you're making payments for AP, treasury settlements, or you're doing investments, just make sure you're doing the right type of due diligence and being careful.
You were talking about being risk for older people who have their retirements mostly funded and them stealing that. But there's also a risk for a younger crowd where they're seeing everybody on social media live a successful life because of Dogecoin or whatever type of coin. And so then something else gets promoted that's a crypto that's not even a crypto. It's just a way for someone to take their money. And they might not have as much starting out, but they could fall for something like that as well.
Yeah, I mean, it's how can I steal your money? I steal it directly. I have you put it in accounts that I can control. I convince you to send it somewhere to ways that I control it. The criminals have a number of pages in their playbook.
We'll keep an eye out for this. What kind of red flags do we need to be aware of?
Yeah, FinCEN has we should put it in the show notes of an article on the FinCEN site, but they identify 3 primary types of red flags. One is behavioral, one is financial, one is technical. So there's a number of warnings that they give, or red flags, to say, look at these things. Are these characteristics what you're seeing? These should trigger a flag. The flag may not mean that it's fraud, but it warrants more caution. Be careful. When you see a red flag, you need to be careful. So flags on behavior, financial, like why should someone be able to get outsized returns above the market perpetually? That's just not something that's that's likely, right? Things will revert to the mean, or enough people would be in it so quickly that it would there'd be other options to keep it in some normal range. And then the technology, how are people providing information that you might be using as a way of confirming? So if I can, there's all kinds of examples of, if you have a method that provides out-of-bound validation, for a certain activity, and I can compromise that other channel, you're going to be very confident because here's the channel we communicated, and then the confirmation, which uses a different channel. I email you, you call me. If I can compromise the calling and the email channel, now I've compromised two channels. You're going to be very confident in that. And so I gain control of your email. I can see what's in your email, and then I take your voice and I do a confirmation that way. So, same thing with, looking at a portal that shows investments or value or return. Oh, your value is going up. Hey, there's another activity going to happen, and we're looking for another big gains, whatever the phrase might be.
Yeah. Okay. Well, this has been interesting. Well, thanks for sharing a little bit about pig butchering today.
Yeah, you are welcome. And I think the best part was you talking about Wilbur. Yeah. Wilbur the pig. So, don't
be like Wilbur. Don't get butchered.
Yeah, have a good spider as a friend, right?
Cool. Well, this has been fun. And if you guys want to go back and listen to those 6 other fraud examples, if you haven't heard them already, they're back on our podcast channel. So check them out. All right. Thanks. Have a good day.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.